Like as I see our post, which is, a story in 0.75 parts, I want to be like, does Jerome Powell know that a standard pour is 1.5 ounces? Why is he only giving us half shots?
Exactly. He's not pouring aggressively enough. That's what he's doing.
Why is he short pouring?
Yeah, no, exactly. Can you imagine if someone made you an old fashioned and they only poured you 0.75 ounces?
I can't because
that is criminal.
It's wrong.
That is another story.
Okay,
in 0.75 parts.
There is only one way that's acceptable to me, and it's if that's all you have left of the whiskey.
Well, we all know that Jerome Powell has printed a lot more than 0.75 ounces of whiskey.
Well, yeah.
Did you know that over $5 trillion exchanges hands on a daily basis? That's an average of over $220 billion an hour. Now, how does this much money move every single day, and why does it move the way it does? Here on Drunkenomics, two bartenders who also happen to be students at the University of Nebraska Graduate School of Business are going to sit down and drink to the global economy and try and translate it into English. So sit back, relax, pour yourself a stiff one, and have a drink with us to the comedy that is the global economy.
All right, everybody, and welcome back to yet another presentation of Drunkenomics. This is the drinking podcast with an economics problem. Do you have an economics problem? Because I certainly have one.
You only have one?
Just kidding. I have several. Too many to count. Let's just start there. But anyways, if you also want to vent about your economics problems, you can do so by joining us on social media. It's at Drunkenomical, Drunkenomical. That's us on Facebook, Twitter, Instagram, the metaverse, whatever it is. We have a TikTok, even though we don't ever use it, even though we probably should. But yeah, you can find us there.
What was this week's bet?
Oh, God, I don't know. I don't think we had a bet because I think, after the QQQ went below 400, it was kind of like whatever, but the QQQ is well below 400 now.
Whoa, and the VIX is damn near 33.
Yeah, the VIX is well above 30, so I guess, that makes you, let's just say it, you're the more gracious host. Like, why not? I mean, you've been the gracious host like 50 times. What's another time for you to be the gracious host?
I guess.
Yeah, and that makes you, what was your name again?
So I am James Goldwater, more gracious host.
Yeah.
I guess I'll change my nickname in the Discord. Which,
you did?
For those of you that want to join us for a fun conversation, ask us some questions, just talk to each other, jump on the Discord. You'll find the invite on all the aforementioned social media.
Yeah, I mean, it's in our description links, or whatever. The link is in our description. That's what I'm trying to say.
There we go.
Yeah.
Permanent invite, folks.
Yeah. It's free to all. I love seeing the interactions there. I mean, so far, it's been great. And I haven't mentioned this earlier, so I might as well mention it now. That makes me the less gracious host. Someone has to be more gracious. Someone has to be less gracious. I might as well be the less gracious host, and that makes me Aaron Wong. So glad you all can join us. Hopefully you have a nice stiff one in front of you, unless, of course, you're about to drive somewhere.
In which case, wait till you arrive. Be safe.
Exactly. That's
Stay drunkenomical. It's very, very clear.
Test that checkers, yeah. So, with that said, I don't know. Let's just hop right into it, because why not? I mean, a lot going on this week. Or I guess,
yeah, buddy.
Because, starting in China, this is kind of a follow-up story from last week when we talked about was it a monsoon or a hurricane or something like that passed over the port of Shanghai?
Yeah, so it's in it's in the Pacific, it's called a typhoon. In the Atlantic, it's called a hurricane, but it is the same thing. It is it's a big cyclonic storm over water. In winter over land, it's called a blizzard. And we definitely, or at least it's now 2 weeks. Yeah. Let's put it this way.
So
Puerto Rico was hit by a hurricane, and we have damage assessments within 48 hours of how badly the island was hit. Now, how long it takes to repair certain issues, different, but you have an idea of how bad things are. Well, a hurricane is about to hit Florida.
Yeah, it was Hurricane Ian or something like that. That's about to
Hurricane Ian.
Yeah, so they're kind of bracing for that. But this is the thing about damage assessments is usually, damage assessments come out 48 hours later. Of course, they get updated as, they discover new things.
As better information comes in, as more structural engineers take a peek. Yeah, so the data gets better.
Yeah.
Or more accurate, I shouldn't
there we go.
Better.
Yeah, exactly. More accurate. But to have none, right? To have zero assessment whatsoever.
This far out.
Is that not in the least bit concern? Still.
For the busiest trading port or busiest commercial port in the world.
Yes.
Yeah, there's an issue there.
Doesn't that place move more cargo than any other shipping port in the world or something like that?
Busiest commercial shipping port. So it's
you'd think so.
This is
if
a big
it's the busiest. Yeah. So it's a big thing. I mean, that's one of the issues. One of the economics problems that China has.
This weekend there was Twitter had a great time.
Oh yeah. Well, I think, this is the thing is I don't know if it was wishful thinking on Twitter's behalf. Maybe it was, because I don't think much of it was substantiated, but it could be. Like, but the thing is, nobody really knows because China has like this lack of transparency with their media.
Has an honesty problem.
Yeah, exactly. Yeah. Well,
mildly.
Well, you put it mildly by saying honesty problem. I put it mildly by saying lack of transparency, which, they're pretty synonymous. But yeah, I mean, so President Xi, I think you're saying his first time out of the country
his first overseas trip or outside of China trip
to
since COVID began.
Yeah, so he went to Uzbekistan for the Shanghai Cooperation Organization meeting or something like that. Is that? I don't know.
It's sort of a security pact, kind of a sort of a military alliance between.
Oh, okay, one of those.
Yeah, things, a collective security organization is really the easiest way to put it. That includes Russia, India, China. So they were all there meeting with Vladimir Putin, where they suggested that Vladimir Putin, based on everything I've read, both China and India kind of told him, yeah, you need to find a negotiated end to this, to your issue in Ukraine.
Yeah.
Because fighting probably ain't going to work.
Didn't we say last week, too, that Russia's deployment, like their army is like on a 6-month tenure or something like that? Or
yeah, so generally speaking, they're contract soldiers and they're kind of when they're brought up and drafted in, they're given about 3 months of training, and then they can be expected to be deployed for 9 months. Well, we're coming up on the end of 9 months now.
Oh, okay. Sorry, last week you did say 9 months. I don't know why I thought 6 months. But yeah, okay. So that sounds about right. So yeah, I mean, I guess that was the meeting in Uzbekistan. Was them saying like, hey, you guys got to figure out how to end this thing?
Yeah, they. I think you had Putin, who was really kind of expecting an implicit backing from
China and India.
China. Well,
or just China.
They probably didn't expect. They probably didn't expect backing from India. They probably expected backing from China, and China didn't give it. So it's a very
ballsy.
Well, not really, because you just found out that your neighbor to the north's military is incompetent and incapable of defending itself. If they can't, if they can't beat their neighbors who do not outnumber them, how can they beat you when you do outnumber?
Yeah, exactly.
Also, they've had to start buying military equipment from you to fight Ukraine. Yeah. So
and China, I think I don't know if China has this rule, but I know Taiwan does because I have relatives from there. But Taiwan has a rule where if you turn 18, you have to go join and serve the military. I think that was kind of a pass down.
Yeah, so China, compulsory military service is there are still quite a few countries that have it.
And I'm pretty sure China is one of them, which is the reason why they have this massive military force. Yeah. Numbers wise, I'm not saying like skill and how good their military is, but saying numbers wise.
Yeah, they have a major quantitative advantage over everyone else.
Yeah, so that's the thing with China. But on top of that, the important part of the meeting wasn't necessarily what happened and what China said, even though that is still very significant. But upon the president's return, so President Xi of China had to go to this meeting. He came back to China.
And he went into isolation.
Yes, he went to isolation. The Twitter sphere, or whatever you want to call it, they had a lot of fun with this. They called it house arrest. I'm not saying whether it was or wasn't house arrest, because I don't know for sure.
They're saying it was, but it doesn't look like it was.
Twitter was saying that it was. A lot of things happened in China that I think, got everybody talking like, okay, is there a military coup happening in China? Because that was the big headline over the weekend, was military coup rumors in China.
Absolutely.
Was it wishful thinking?
I think if you are China, it would be wishful thinking. Well, like Xi Jinping's 10 years of premiership, his 2 terms as a premier, have been demonstrably bad for China.
That's really putting it nicely, too. Like, the fact that you said it like that shows the world how polite you are.
I'm feeling particularly gracious.
Okay. Oh, yeah, that's right. Yeah.
Well, no, but think about it. Like,
you're right.
China used to have a growth target that was basically they would do everything in their power to meet their growth targets. Mm-hmm. The growth target's now been abandoned. It's that second child when the one-child policy is still in place.
And that's the weird thing. Because the weird thing is, growth targets, I feel like China has been, and this is just me speculating, I feel like China has been fudging with their numbers because they're hitting all these growth targets every single year. Or not hitting it, but they're seeing GDP growth in 2020 and in 2021.
Yeah.
Like, I just don't know how reasonable that is.
Well, they're seeing growth that, or at least not shrinkage, but they're seeing growth that's like, when you get an economy that size, how are you growing at 5%? Because it doesn't work.
Exactly.
The law of large numbers says that there simply isn't that much wealth there.
Yeah.
And I don't mean in China. I just mean like, if the U.S. economy is growing at 2%, how is China, which is only barely behind it, growing at 5. It doesn't.
And they're
work.
saying their GDP is like what, 9 trillion or something like that. I forget how big their economy is now, but at one point it was like 16 trillion. It could be actually even like 14 trillion. But like if you're growing at 5% of that, that's a pretty big number.
Yeah, it's not insubstantial.
So to me, it just doesn't make sense. So when the country is removing growth targets, even though a lot of what they say about their economic growth is controlled by themselves, and they still don't want to say anything about it, isn't that kind of fishy, right? Like, I feel like that's...
Yeah. Like, it's certainly... It means that they're sitting here looking at it and they're going, we do not have the ability to fabricate these numbers. And so, therefore, we are going to... We're just going to stop talking about it. Remember how we talked about... we've talked about in the past when you're listening to an earnings call, or you're listening to a CEO talk about something, what they say is important, but what they don't say is also hugely important.
That's kind of like the question mark that appears. And in China, when they're saying no more estimates, no more, it's like, well, that's a little bit tough to price in if you're an investor or a trader.
Yeah. It would seem to indicate bad news.
Yeah. So, the fact that they're not mentioning that, maybe they're leaning towards other things too. Maybe they're looking for ways to gain more control. Maybe the administration is looking for ways to gain more control.
Yeah. Well, I think if we really look at it, because let's look at what Xi has done for the economy in China.
Yeah.
He has he has reversed the liberalizing policies that led to 30 years of growth. Right, from the 80s through the early 2010s.
Yeah, like the free trade.
He's gone back on that.
The free trade. Okay, let's not make trade that free because I want to control it. And then,
I need to slow you down. He's turned on the tech sector, his education sector, his social media sector, all of it. And it's because he hasn't specifically said it, but he's alluded to very much that he has a concern that these private firms could garner enough support to destabilize the Chinese Communist Party.
Yep.
And so he has restrained them. So, tech sector, and these were the sectors that were growing the fastest. These were the things that were like allowing him to claim the growth targets.
Yeah. So like if GDP in China was actually growing, it's these sectors that President Xi has to thank. But now he's saying, all right, I'm going to crack down. Like that's what didn't make sense about 2021 was like, all summer last year, I remember headline after headline, Chinese crackdowns on tech, Chinese crackdown on education, on social media, on mass communication in general. All these headlines kept coming out all summer last year. And I'm like...
One of the rideshare companies, its stock, I forget which one it is, but its stock is down 80% from its IPO.
No, yeah, that's right. I remember it was the one, I forget the name of it too, but James Cramer was talking about it. That was like the real big famous inverse Cramer moment because he was saying buy more of this. I forget what company it is.
I think it's Didi Zhuxing.
Didi. Oh yeah, Didi.
Didi.
Yeah, okay. Thanks for looking that up. Yeah, so I remember that. And yeah, like they cracked down on that. They cracked down on a bunch of other things. So that's why, like, when I heard that China had a positive GDP growth in 2021, that just made no sense with the crackdowns and with COVID and no nonsense COVID policy. It just made no sense. And in case you guys are wondering, I know, like, was it a month ago or 2 months ago or 6 weeks ago, whenever it was, when we talked about the Chinese bank protests.
Yeah.
A little update on that story too. Yeah, I mean, hasn't gotten any better.
It haven't gone away. Yeah.
If anything, it's gotten worse because it went from bank protests to now COVID protests to a bunch of other things now. So it's mass protests everywhere. There was a convoy of military vehicles headed towards Beijing over the weekend, and that's why people thought there was potentially a military coup. I'm not saying that there is or isn't going to be a military coup in China. All I'm saying is a lot of military
that was the rumor.
Yeah, and it started because a bunch of videos, from people's cell phones came out on Twitter of military vehicles, like tons of them going towards Beijing.
The weird thing is, geopolitically, economically, really for essentially, as I see it, everyone except for China's immediate neighbors, Xi Jinping staying in power for an unprecedented third term is good. Like, so from the U.S. perspective, that's good.
But like
he's going to continue to damage the Chinese economy.
Yeah.
He's going to continue to hurt Chinese interests enough to drive them back into the arms of the U.S., into Western interests.
Yeah,
so
it's what you were talking about too is like he vowed to make China the best at what? Semiconductor production?
Technology. He's really tried to push on all these things. He wants China to lead the world in.
The world,
You see the U.S. with the CHIP Act. You see Taiwan, which isn't particularly thrilled with them. The mainland China present. Yeah. And you've got, China is not leading with semiconductor chips. They're restricting their own tech firms means they're not leading the world in technology. Well, their inability to produce the semiconductors and restriction of their tech firms, which are now shrinking, means that they're not leading the world in quantum computing development.
I mean, so long story short, to summarize what you're saying is China is literally leading the world in zero things.
Except it is actually leading the world and not leading the world in anything.
Yeah, there you go.
Despite all the efforts to do so.
Yeah, well, they're tied with a lot of people in that category, but you know.
Well, yeah, remember, it's nationalizing. It's nationalizing. It's huge amounts of state sponsorship and nothing to show for it, I guess is the way to put that.
Right.
It's that if we look at Germany, we see that the German regulators have seized control of those 3 refineries we were talking about last week to refine oil into gasoline so that the cities there around are provided with fuel because they wanted to seize control from an economic enemy in Russia to stabilize prices and provide adequate supplies to your people.
Well,
that's not great. We sit here and be like, we both, I think we thought it was funny that like they're doing that doing that to Russia, who thought like, oh, we're going to play economic games. And the Germans went, oh, okay. And the Russians probably are going, wait, what?
Yeah,
I don't understand.
Yeah, because like we're both looking at it like, oh man, that's not good. That that a country can just take just overrule property rights and just take an extremely valuable asset. And then. But it's also like, they're doing it to Russia, so it's not like, we're not like, we're not losing sleep over it.
They thought that they were going to be the only ones doing this, and now they're very unhappy that it's happening to them. And it's like, well, but like, whereas like in Germany, it's going to work to an extent for what they're doing. Right. So that's kissing. If they're kissing a frog, China and Xi are kissing a poisonous frog. Because it's in both cases you're kissing a frog, which
it's not good. Right, 1,000 other things I'd rather kiss.
Like if that's your thing, I'm not trying to shame you, but but
a poisonous frog, I will tell you, I will warn you ahead of time. Like don't do that.
Yeah, that's definitely not a great plan.
But China has been doing that, and the symptoms of them kissing the poisonous frog is it's companies like Apple, which is, let's be honest, the most important company in the world.
Absolutely.
They're moving to other places because China at one point did lead the world in cheap labor. They don't lead the world in that anymore. So now Apple, they're looking at places.
They've gone to India.
Well, not completely, but they have started.
No,
they're
still producing. They're still producing in China. So they have produced older model iPhones in India prior to this year. But as of now, they're also producing the iPhone 14. Is that what they're at now?
Yes, the 14.
Which is the top of the line iPhone. And they're producing it in India for the first time, which that tells me that they are moving their production base. I think it's Foxconn is the company, but they're moving their production base out of China.
I will say
into India.
That's the symptoms of the poisonous frog is that the companies are looking elsewhere, and that's not good for China's economy. So probably another reason why they're removing growth targets is because they're going to see a lot of American assets flee China, as if they weren't already looking at a real estate problem.
I was going to say it's hard to hit your growth targets when your companies when production's leaving, when the thing you do
the one thing that you were good at, you're starting to be less good at. So, I mean, why would anybody leave China? Because of geopolitical risk. I mean, is it unstable there? I don't know. I can tell you one thing too. It's not very stable in Italy as well.
No,
I mean, I don't know. Like, so what? Mario Draghi's out.
Yeah, the Italian election has occurred.
Yeah,
and
Meloni.
Mario Draghi is out.
What's her name? Georgia. I don't.
Georgia Meloni.
Meloni. Yeah, I feel like that's not how you say it, because in Italian, do you say your G's like that, or is it?
I don't know. We can call her Meloni.
Let's just call her Meloni.
She's in.
Yeah, she's in. So Mario Draghi, I mean, we talked about it a while ago. He wanted to resign, and the president of Italy was saying, like, please don't resign. What was it? He was the prime minister, right?
Yeah, he's the prime. He was the prime minister, and now it looks like Meloni will be forming a new ministry.
Do you know when that's going to happen? I don't know when that's going to happen, because I know the election.
Well, she's been elected, and so at this point, once the election has
just a little backstory. I mean, Italy has been massively politically unstable since 2015, probably 2018 was really when it started.
Italy's had a lot of problems the last 20 years, and if we looked further back, it wasn't all that great before then too.
Right. Still great food, but I mean, so they have this Meloni character in. pros and cons about her. I mean, she's pro Taiwan. She is very conservative. So if that's not your style,
yeah, she's pretty far. Yeah, she's her Brothers of Italy party, which is a very conservative party.
Very. Are they like libertarian conservative, or are they like actually conservative?
I think they are the far right party.
I think
of Italy.
From what I've heard, they're conservative. Like libertarians are really like conservative fiscally, very conservative fiscally, and then socially, don't really care about anything. But I think the Brothers of Italy, I think they're even like socially, even that aspect of politics, they're conservative too, which I think she is as well. Like she's very conservative.
Berlusconi likes Berlusconi likes her. Steve Bannon had a thing with her.
Steve Bannon likes her because she's a populist, and Steve Bannon is a populist.
Exactly. The big questions to me with her is, how is she going to negotiate the energy crisis Italy's in? How is she going to deal with? How is her relationship with the EU going to work? How is she going to deal with the war in Ukraine?
Yeah, I mean, she hates the EU. And not she hates the EU, but she's very skeptical of the EU, which, I think that's going to benefit her in a lot of ways, because the EU has these energy, they have a lot of green energy policy, which we talked about the Dutch farming protests. Those started because of all the EU green energy policies.
Which were not particularly well considered when they were
passed and enforced and everything. So I 100% get that.
I think her real problem is going to be is that so as I see it, her party are pro-Kyiv. They're pro-sanctions against Russia. Yeah. But so she has a coalition government, right? Again.
But it's Italy.
The partners of the coalition are less convinced.
Yeah, but I mean, it's Italy, dude. It's Italy is literally just pure coalition. It's there's how many political parties in Italy, and then all they really can do to gain power is form a coalition with another political party, to get the votes that they need.
Exactly.
And then of course, you form a coalition with another political party, but you guys disagree on this one thing, and that one thing that you guys disagree on, even though you guys are pretty much the same political party, that thing just tears the coalition apart.
It can.
Yeah, but that's Italy. I mean, that's Italy in a nutshell for the last 5 years.
Oh, yeah.
So, yeah, but anyways, she's conservative. There is a concern about, how she's going to deal with the energy crisis, but at the same time, if she is as free trade as she makes herself out to be, I think there could be some sort of solace there, but we just don't know.
Yeah. So my thing will be, how does she handle Italy's debt? Because she'll be taking over from a government that did have a technocrat, someone who understood the economics, who when he wanted to turn and negotiate with the ECB or with the rest of Europe, he understood what they were asking for, and they understood what he was asking for. They were speaking the same language.
Yeah, he was very well. Say what you will about Draghi. And I personally, I didn't mind Draghi. He was very well respected with the ECB and with the EU and with I mean, name an organization in Europe.
He knew what he could ask them for, and he knew what he couldn't.
Yeah, because he was a technocrat. I mean, he was good at that. That was his language.
Yeah.
So with her, I don't know. The EU hates her.
Well, on several occasions, she's asked for Italy. She's suggested Italy should leave the Eurozone, leave the EU. So it's
so Brexit now goes to.
I don't know how we make that one.
I don't know how to make that one work.
I guess we'll just have to call it ciao.
Ciao for now.
Yeah, but that's Europe's fantastic. I mean, and speaking of Brexit, you have the pound hitting all-time lows.
I mean, I don't know if that has anything to do with Brexit. I mean, not that Brexit helped with that, because both currencies, the EU, the euro, the euro it's been stacking terribly up against the dollar. I mean, the dollar index has gone dangerously strong. I would say concerningly strong.
I would agree.
Yeah, but both central banks, the European Central Bank and Bank of England, they've both been extremely slow with.
They were slow to raise rates. They were.
With the hawkishness or whatever.
Yeah, they were late to the party, slow. I mean, they're still probably in a better.
The EU is in a better place, or Bank of England? Because I think Bank of England's in a better place.
The Bank of England's in a better place than the EU, because the EU was slower than the Bank of England. The Bank of England is probably going to have an emergency meeting, an intercession raise, just because they can't have the pound destabilizing like this.
Yeah, and I think that's what they were talking about.
Both of them are still in better shape than, say, Japan. Some of these countries that have not that are very slow to raise their rates, and they're sitting here at risk because, we not to just blow past the kind of not collapse, but the huge swings in the value of the pound. But we saw the Fed meeting last week.
Yeah.
Powell is not he is not slowing down. He looked at the data. He said, "Look,
and that's something I want to harp on a little bit later." But like the Bank of England and the ECB have been like the ECB hasn't moved until their last rate hike of 75 basis points,
which was their first one in
3 years,
15 years or something.
3 years.
It was huge.
Yeah, which was late. And like they didn't move until then, and then they just did a jump start like that. Whereas the Bank of England, they've been moving at snail pace for the last year and a half ish. So their snail moves have literally slightly pushed them ahead of the ECB, which accelerated off the blocks, but still is behind the Bank of England. So like a lot of people keep talking about like, oh, this is great for America. They like, the dollar is so strong. It's so good for America. And it's like, yeah, if you're going to vacation to England or Italy or wherever anytime soon, yeah, it's great for you.
Yeah, if you're going on vacation, this is great news.
Yeah, or if you're trying to buy a ton of Italian products or German products or whatever it is, congratulations. But
if you're selling services to anyone outside the U.S., if you are a farmer who is selling food goods to anyone outside the U.S., if you're selling, if you are exporting anything out of the U.S., this is a problem.
Yeah,
it's a real problem because you're seeing huge declining buying power.
Yeah, big example. Overseas. If you're trying to sell refined oil to like Dutch Shell, which is, Shell, you've seen those gas stations, or BP, you've seen those gas stations. Like, if you're trying to sell gas to them in Europe, they're not going to want to buy from you because they have to trade their currency for U.S. currency, which is super strong. So their buying power is super weak here in the U.S. So why would they ever buy anything from the U.S.?
Exactly. With the current exchange markets being what they are.
Yeah.
In order to solve this, what you'd really have to see is, you'd have to see some very, very active movement between Treasury and between the Treasury Department, the Fed, and foreign central banks to buy their currencies from them, to sell dollars into the market, into these other markets at a rate that is better than what the market's going to give it because the market's pricing in further decline.
Yeah, but but why would they do that? I know why they would. But the thing is, it's detrimental to your own country.
It is in the short term. It is in that. It is. You are right in that you would be saying like, okay, the U.S. government is going to sell dollars to foreign governments for less than the banks here would sell these dollars for, and these banks are going to get angry. Well, why won't you let us do it? Because you're taking money away from us. But the response then from the government would be how many farmers are selling to people overseas? Almost all of them. How many businesses? How much of the U.S. economy is dependent on sales overseas, so that we have to keep those people buying our goods? Our dollar's too strong.
And that's the thing is like, so one of the catalysts, people are talking about like, okay, why is the market selling off? Because remember the carnage we had last week? And so far this week, today's Monday, September 26th, there was a little bit of carnage today too. Everybody was playing that game where, hey, if you own a security, let's sell it at the bid. Whatever it's at, any and all securities you have, sell it at the bid. Why is that happening? Because I want cash. Why do I want cash? Because the dollar is so strong. The dollar index is at 114. Why would you not want cash? So, granted.
Well, inflation. The answer to that. Yes, but at the same time.
But at the same time, one, when the dollar index is at 114, and two, when inflation is at 8.3%, that just makes equities seem so much less enticing. And also, when the U.S. 2-year is at above 420. That also makes equities. That also makes equities much less enticing, and the 10-year is at above 3.8. So all that makes equities seem much less enticing.
Well, because you're now sitting here looking. You're now sitting here looking at it, going, "Is this about it? Have we hit the floor, or is the floor about to drop out?
Right?
Is the bottom about to fall out of this market?"
Yeah, but on top of that, from a fundamental standpoint, right? Those are all. I guess those are all kind of fundamental standpoints too. But like from another fundamental standpoint, take a company like Amazon, for instance. Amazon Web Services is a big driver in their revenue. Amazon Web Services also services a lot of countries in Europe and England, but they can't pay for as many services as they used to be able to. Because it's like, because their buying power is so much weaker. Normally they would be going like, hey, here's £100. Give me $200 worth of services. Now they're saying, here, here's £100. Give me $105 worth of services. So it's like their buying power is literally cut in half. They can't buy as many American products or as many American services, including services from Apple and Amazon and
it's the
drivers of the S&P 500.
It's the age-old argument. You can buy 3 apples for $2 a piece or 2 apples for $3 a piece. The seller is going to have one more apple, which now he's having to hold. He's now like, well, who am I selling this to? Because now I have storage costs and holding fees. What am I supposed to do with this? And the buyer's like, I'm getting one less apple, even though the amount of money being exchanged is the same.
$6. Yeah.
Still, that's $6, but we now have inefficiency because of that disconnect.
Exactly. So bringing it back to the States, I mean, the reason why the dollar index has been so strong is, let's state the obvious: 75 basis points. Fed is way ahead of every other central bank in the entire world, even though
it's still behind the curve.
It's still behind the curve. I 100% agree with you. But back to what you were saying earlier, the Fed decide to stop mentioning when they're going to lower rates. They decide to stop forecasting all that kind of stuff. But at the same time, they've been committed to their hawkishness, which is, I think, what you're saying like 5 or 10 minutes ago.
Oh yeah, no, they've
at all costs, right? Even forex risk.
Well, it's very much that and if we want to transition into what is happening in the U.S. now, to the kind of the implications of that Fed meeting, like Powell has a mandate to deal with unemployment and inflation. That's really the dual job of the Fed. Unemployment is very low right now.
Unemployment's super low.
Inflation is very high. And so he has to quash it. He has to. I mean, we haven't seen a situation like this since Paul Volcker in the 80s, where he had to...
this is just me, but just me opining for what it's worth. I really think that what Jerome Powell is going to look at, I think he's going to keep an eye on employment. And if if the gap for unemployment actually begins to narrow, and all of a sudden there are fewer job postings than workers available to work them, then I think he's going to start considering lowering rates again. I think that's what's going to happen. And I think the Fed
I think you're right.
I mean, basically what the Fed is looking at like employment figures show no real sign to slow down this hiking cycle. So because of that, they're just going to hike as aggressively as possible, even though there's forex risk and even though the dollar index is at 114.
I think you are probably right. I think you're certainly right in that he's going to have to look at unemployment.
Yeah.
And as long as that stays where it is, the gap, he has to assume, or rather the data is telling him that that this economy is still running hot.
Yeah. I think Jerome Powell is going to look around, and if he sees a bunch of help wanted signs up, he's going to be like, okay, there's no real reason for me to stop hiking rates. So I'm going to keep hiking until I see all those until all those help wanted signs come down.
Until we get back to a natural inflation rate, or what they calculate a natural inflation rate, or natural unemployment rate. Until they get back to what they calculate a natural unemployment rate is. I certainly agree with you.
Okay.
There's no doubt. To me, they've stopped saying they're going to lower rates in 2023. They've stopped any kind of talk about easing the economy back out. Now they've just said, no, we have to deal with inflation before it becomes embedded.
Yeah. And I'm going to pull some notes because my job recently it afforded me the opportunity to sit in a meeting with one of the former Dallas Fed presidents. So that was pretty cool. But he basically, I'm pulling some notes from that meeting, so don't take me for the super smart guy. But he basically said that Paul Volcker, who, if any modern Fed president theory, I think everybody's pretty much following Paul Volcker because he was the guy, and he took a lot of heat for what he did. But looking back, it's like, okay, no, what he did actually made sense for the economic cycle that he was in. Inflation, I don't even know what it was when he was in office, but it took 3 years and 2 recessions for him to actually tame inflation.
And he had to take, inflation was at 11.35% in 1979 when he took over.
So there you go. So,
at the Fed.
Yeah, so thanks for coming through with this. Like 11 point, you said 11.3?
35.
Yeah, that's a lot worse than it is now, or that it ever peaked at in this last inflationary cycle.
Yeah.
Yeah.
But he had to take interest rates up to 20% to do it.
Yeah, which is insane. And here we are, we have a Fed chairman in Jerome Powell, who I think is actually doing a reasonably good job. Reasonably.
He's better than everyone else.
Yeah, he's been put in a really tough environment. So
absolutely.
From what I've heard, from this meeting that I had earlier this week, Jerome Powell, he can't be seen in public at all. If he's seen in public, people are going to go up to him and be like, what are you doing? What's wrong with you? He'll eat in a restaurant with his wife, and people are going up to him really? You're that late on inflation? And it's like, okay, well, what about Christian Lagarde? Anyways, a little tangential there.
Yeah,
but
not that late.
Exactly. But yeah, I think he's doing good for this situation. Could he be doing better? Absolutely. But
was anyone else ahead of him? No.
No, exactly. So, like, Volcker took 3 years to tame inflation. Here we are with Jerome Powell. It's been about a year and a half, and I think inflation's peaking. I don't know. Like, it's coming down from its highs.
I think we're plateauing. I'm not sure if I think we're plateauing.
75 more basis points, 2 more times. From now to the end of the year, maybe it does actually go down. You crush demand like that, maybe it does go down. But right now we're expecting, 4.4%. Is that what my notes say? 4.4% Fed funds rates by year end, which is about 1.5% away.
2 meetings.
So that's 2 75 basis point rate hikes, which means, the next 2 meetings, I'm guessing 75 basis points, 75 basis points. The markets are probably going to price that in.
Yeah,
right
no,
now.
it's certainly, it's this, if we get there, that's par for the course. I know that there's an expectation that will slow down GDP forecasts.
Yeah.
But you'd expect that.
Yeah, but I still think, even then, like, I still think GDP forecasts are still optimistic, because I think they're still projecting a positive, or at least everybody except for Atlanta. The Atlanta Fed, they've been the most pessimistic. So, props to them, even though Bostic, I still think, needs to shut up. But I think they all need to shut up.
Yeah, I was just say it's not just that one. It's not just Bostic. It's you want them all
daily,
quiet.
Investor, whatever. It's just all be quiet. But I think it's still optimistic. Aside from the Atlanta Fed, I think Atlanta Fed might be accurate, but I still think a negative GDP growth is still in the sights for whoever is forecasting this. And I don't know. We'll see. Like, this quarter is almost up. So
yeah, I think we get through 2022 with positive GDP growth. I think 2023 is where you see those predictions start to slip. What I'll say is this, and maybe this is me being more optimistic than I should be. I don't know if it goes negative.
In 23 or 22?
In 22 or 23.
Wow, because I think 22, like, annual GDP growth in 22, I think is actually going to be negative, personally. I'm drinking to it.
Yeah, no, I'm thinking. I'm trying to think about it, because you're right. We are at negative. If the year ended right now, it'd be negative 2.2.
Yeah, because right now it's negative already, right? And it's first half of the year is gone already. So we're already
okay.
So we're already negative.
What I'll say is this:
Q3, if we're positive, that would shock me like crazy.
It will still be negative. I think we'll be on the trend up by the end of Q4. So I guess that's maybe what I mean. We'll be on an upward swing.
Okay, so I thought you were talking about like annual GDP then.
Oh, no. So, I meant in Q4. Q3 I think Q1 2023 will be very close to zero. Q2 and Q3 2023 will be low but positive, and I think Q4 will be pretty solidly positive. That's just optimism, maybe.
Yeah. Okay. Well, let's see. Because I think what we need to look at is, has the U.S. dollar index peaked? If it's peaking at 114, then I'll give you Q4 positive.
I don't think it's peaked.
I'll give you that.
I don't think it's peaked.
Okay.
It's not going to peak until inflation's actually done here and everyone else can follow suit. Okay. Then, and is following suit.
So if that's your prediction, then I really don't think Q4 is positive. Just because if there's no commerce from Europe, why would it be positive?
No, you're right. So, what I mean is it'll be negative, but it will be less negative than Q3.
Oh,
it will be a slower. Okay. Yeah, I'm sorry. It will be less.
Okay,
decrease.
So you're saying
it will be a more positive.
So you're saying the reverse peak will be in Q3, like the bottom peak will be Q3.
Yeah, the trough will be in Q3.
Trough. That's what I don't know why I couldn't think of that word. I was trying to think of the word, but yeah, trough.
No, you're good. I'm sorry. Yeah, no, that's what I mean. There'll be a trough in Q3, and we'll be trending up out of that. Will it be positive? I don't know, but it will be a positive slope from a negative spot.
Well, based on because they released notes from the Fed meeting last week, and they pretty much said, it says the Fed sees 2022 unemployment rising just barely to 3.8%, which was revised from 3.7%. That was their projection for unemployment by year end. So year end, they bumped unemployment up to 3.8, and core CPI, they revised a little bit higher. They went from 2.7% to 3.1%. So in other words, they're expecting the inflation rate by 2023 to be 3.1% instead of 2.7%. So that's kind of the revisions from the last meeting, which is really the reason why markets got crushed right after the meeting.
Yeah, well, amongst
other things.
Amongst other factors, but yeah, that was a pretty explicit reason.
Yeah. But I think you're onto something. I do think the trough for GDP growth.
The trough for GDP.
Q3 probably, because I think, everybody's been saying this, and I agree. Like this recession, I think we're in a recession. This is the weirdest recession ever because I think we're in a recession, but we're also in pre-recession.
Yeah,
so we're in pre-recession and we're in recession.
This is a recession that is being driven almost exclusively by inflation. Yes. So like when we see GDP shrinkage, it's not because there isn't money flying around. It's because the value of that money has decreased to the point where there's not as many goods flying around.
Right.
Exactly. So it's this. But
it's a $9 trillion balance sheet. It's a $9 trillion balance sheet. That's what I think it is. Honestly, I think it's a $9 trillion balance sheet.
Yeah.
So and low interest rates for 8 years or however long it's been.
Yeah, for nine. Well, low interest rates for 8 years, and then no interest rates for 2 years.
Honestly, why do you think NFTs and SPACs and all this? Why were those and meme stocks? Why were those all a thing? Like those were all a thing because when there's that much money, what do you do with money? You create vehicles like that to invest
you want. When
no fundamental support whatsoever.
There's that beautiful thing called moral hazard. When money's free, where's your incentive to be smart?
There you go. So why do you think those things existed?
And popped like they did because people were willing to buy it.
And that was happening because we had this $9 trillion Fed balance sheet.
Absolutely.
Which, I found out recently that you can look at the assets and liabilities on the Fed balance sheet. Every Thursday it gets updated. It's the H.4.1 report. It's accessible for everybody in the world. And you can see all the assets on the Fed balance sheet. So they didn't talk about this very much in the Fed meeting. And I think if GDP contracts even more, it's going to be because of the unwinding of this Fed balance sheet.
Well, as you pull,
once you pull it, it's scary. This is scary what you're looking at. Like if you look at the Fed balance sheet, if you have the curiosity, I encourage you to go look it up. The H.4.1 report. It's free to everybody. You have to pay anything. It's public information.
Yep.
Look this up. So they're sitting on 2.5 in reverse repos, which is, if you want to talk about manipulation, is there a better description for manipulation there? On top of that, they're sitting on $2.7 trillion worth of mortgage-backed securities. MBSs, you've probably heard that if you've seen The Big Short.
And almost all of that is over 10 years.
Yes.
It does 10 years till they're done.
Remember when in June or July or whenever it was when they initially started QT, which is quantitative tightening? Quantitative tightening basically means they're pulling assets off their balance sheet, the Fed balance sheet.
Pulling cash out of the market by pushing assets into the market, right?
Exactly. So quantitative easing means they're pushing cash into the economy. Quantitative tightening means they're pulling cash out. How do they put cash in? What they do is they buy assets, they buy bonds, right? So, they buy a bond from a municipality. Sorry, I've had way too many totally dues.
Yeah, they'll buy a muni bond from a municipality. They'll buy a
mortgage-backed security,
treasuries,
right? Yeah,
mortgage-backed securities. So any kind of commercial script. So any kind of script, really, they'll buy it.
They can't buy stock.
Put cash into the place where it came from.
Yeah,
generally with an agreement.
Exactly. They can't buy stock. They can't buy anything like non-investment grade. They have to buy investment grade securities. Yeah, so they'll buy mortgage-backed securities. What does that do? That means the Fed is taking their own money. They're putting it into the hands of the companies that own these mortgage-backed securities.
And they're saying, here's cash. Go do what you do.
Yeah.
We'll hold on to this. And in a certain amount of time, we're going to sell this back to you. You're going to give us our cash back. Yeah, or they turn to someone else and they go, hey, look.
Yeah, but they don't know. Like the thing is, the Fed can hold on to these as long as they want, right? They can flood the economy with cash for as long as they want, and they can say, oh, by the way, we're going to do quantitative tightening
in
now.
6 months, we will be back for our money.
Yeah,
because they have that right. They have the companies that they buy these from do have a legal obligation, usually to buy these back from the Fed.
They usually do, yeah, absolutely. But at the same time, the Fed sometimes they don't necessarily have to give a timeline. So a lot of times
they don't.
These companies,
sometimes the Fed just goes, we're going to go to the open market and we're going to put this out there and pull cash out.
Yeah. So if they sell these 2-year mortgage-backed securities that you have nothing to be concerned about because it's they mature in 2 years. So remember in June or July when they wanted to do quantitative tightening, which is basically the opposite of quantitative easing, right? So you're sitting on all these securities. They're saying, hey, we're going to sell these back to you.
Absolutely.
So basically you're giving the Fed money. The Fed is pulling money supply out of the economy. So that's, really one way to offset inflation, which is what they're doing right now. So the Fed announced QT, quantitative tightening. They started that back in June. a lot of that was, MBSs, treasury securities, and all that kind of stuff maturing. And that was just the quantitative tightening cycle. That was just matured. They became cash.
Yeah, they didn't go into the market, and it was they took the cash from the people who were paying their mortgages, from the treasury, from the Department of Treasury, which was paying the interest, paying the principal, paying the face value, and that's how they did that. But now it's September. It's September now. It's no longer a point where they're going to go, hey, look, we're just letting expirations as this goes. Now it's actively high. Yeah. We're now going to begin more actively drawing cash out of the markets.
Yeah, at the pace of $30 billion in mortgage-backed securities and $65 billion in treasuries and U.S. securities and government-owned securities. So with the Fed owning most of their MBSs, like 2.65 trillion of their mortgage-backed securities expire in over 10 years, and they're really only sitting on about $2.7 trillion worth of mortgage-backed securities. At some point, they're going to have to sell these securities. They can't just let these expire.
No, they have to sell them into the market to recoup the cash they put in.
Yeah, so that's going to be
2 years ago.
Exactly. Yeah, so that's going to be one scary sight.
Yeah, I agree with you. It's definitely going to be a scary sight it might be a scary sight. Yeah. Like if the banks are prepared for this, and they should be, if the market's prepared for this, and it should be.
They're not. They're not.
No, of course they're not. You
want to know why
they're more than happy
to
sell because they don't have to be. They don't want to be.
Yeah.
It's profitable not to be.
Yeah, but the reason why they're not is because, like I mentioned earlier, like the Fed is sitting on $2.5 trillion in reverse repos. So the incentive for you to be sitting on this cash to buy back these loans, it makes no sense. Because
it's antithetical to everything you've
Because at the reverse repo markets that will provide you...
It's antithetical to your business purposes.
Yeah, and the reverse repo markets are going to give you that liquidity, because everybody's talking about the liquidity issues in the bond markets and all that kind of, and the repo markets and the MBS markets and all that kind of stuff. Everybody's talking about that.
Oh, yeah.
But here we are, the reverse repo markets, that gets rid of the liquidity issue. It's the Band-Aid, and you can apply that Band-Aid on every single week because the Fed is doing that every single week.
Yeah, their 15-day reverse repos on the MBS they're selling back into the market.
Yeah, so
it really is a spoonful of sugar, as Mary Poppins would say.
Exactly. So I mean, if I was one of the recipients, I'd be like, okay, what's the incentive for me to actually be responsible with my own money?
When I can be irresponsible with yours.
Yeah, exactly. Like, I mean, I have an athletic background. Like, if I didn't prepare for a tournament, like a golf tournament, I would sleep in the bed that I made, because that's what you do. But if you're a bank that is sitting on all these MBSs, or not sitting on, but you have sold all these MBS, you're shorted, whatever you want to do. Like, you sold all these MBSs to the Federal Reserve. At some point, you knew that you had to pay them back. If you don't have the cash, lots of luck, no sympathy for you, because those are the financial decisions.
Yeah, what do you have? Because maybe we'll take that.
Yeah, because this is the financial decision that you made for yourself. So, sorry to be harsh, but it is what it is. I want there to be accountability, but thanks to the reverse repo markets, there doesn't need to be that much accountability. If there are bond liquidity issues, it can just be resolved with the reverse repo markets.
Well, yeah.
Why not?
No, you're not wrong. That's let me rephrase that. I hope you are wrong, and that they are ready, but I haven't. You're probably not wrong.
Well, this is the thing.
Put it that way.
Am I totally against reverse repo markets? No, I'm not.
They serve a legitimate purpose.
Absolutely. But would I be, and this is maybe the Giorgia Meloni coming out of me, because this is the populist. This is the populist.
A right wing. You're going to be a right wing Italian for a minute. This could be concerning.
No. Not a right wing Italian. This is just the populist coming out of me. Okay, so this is me being the populist. So reverse repo markets, are they a detriment? No, not really. Sometimes, but not really. Do normal people have access to reverse repo markets? Does the mass population have access to the reverse repo markets? And the answer is no. And that's my populist coming out of me, is that the mass population. Oh yeah, does not have,
why are the most capitalistic institutions in these countries? Why are they given such a socialist tool?
Exactly.
Whereas the average person does not get that. So I would certainly agree with you that there's.
Yeah, so that's my populist coming out of me. It's like, I'm a populist sometimes, right? Like, why do these big institutions have access to the reverse market, but why don't, me personally, I don't have access to it? Why not?
So,
yeah. So that's I'm not trying to be like.
No, but it's not an unfair question, to be fair.
Thank you. That's what I'm saying. Is like, why don't I have access to the reverse repo markets? If I can't pay this credit card debt, why can't I just sell you my? I don't know. I'm trying to look around for a valuable asset of mine, but why can't I sell you my whiskey collection? for 2 days.
Well, I mean,
pay my credit card debt so I don't default on that, and then buy that bag once I get my paycheck.
And here's what I'll say. I guess technically there are pawn shops.
Yeah, I know, but that's not quite like, because
it's not exactly the same. You're not wrong, but it is.
Pawn shops are not guaranteed, right? Like, you sell something to the pawn shop, you don't have the guarantee of buying that bag within 15 days.
You do. Most pawn shops. My understanding is most pawn shops, you can essentially they'll set it by for 5 or 10 or something.
Yeah,
there is a very short period where they'll be like, look, we'll hold on this for 10 days, but after that, no guarantee.
Okay, but for 3 weeks, because if you're talking about 15 days, 15 business days, 3 weeks.
Oh yeah, you don't get that.
Yeah, so if I had David Gilmour's guitar, I can't just sell it to a pawn shop for $1,000, pay off my credit card debt, and then get a couple paychecks from my job, and then go back and buy back the guitar. It doesn't work.
No.
Yeah, but with the Fed, yeah, you buy back the same exact asset, the same exact thing.
Yeah.
So that's just me. I don't know. I'm a pessimist.
It looks good on you.
Thank you. But so yeah, I mean, I was watching CNBC earlier today, and Guy Dami was saying he's a Fed hater and he's proud of it.
Wow.
And guess what?
We should get that on a shirt.
Yeah.
I think it'd look really good on you.
I think it would look good on me too.
But we don't have that shirt yet. But if you want to see some other sweet Drunkenomics merch that you can look good in, or you can just, you can frame it and put it on your wall. If that's your jam.
Yeah, exactly. Maybe it can be
you should check us out at Drunkenomics.
Yeah.
Check us out at drunkenomics.myspreadshop.com. The hoodies come in black, and
darker black,
also black,
and darker black.
If you want to look like Aaron on the links, you can get your Drunkenomics golf polo. We did it. Wait, those are there.
Exist.
And if you want to participate in your own, personal quantitative easing program, then you can check us out at patreon.com/Drunkenomics.
Yeah, that's
and you can just
that's essentially our tip jar. So yeah,
you can be our Federal Reserve. But only for quantitative easing purposes. I'll be honest.
QE,
the quantitative tightening isn't going to work. In this respect.
Yeah, I mean, no offense, but we can't do any reverse repos.
Exactly. So. This is a one-way street. But yeah, patreon.com/Drunkenomics to help us keep the lights on, liquor cabinet stocked, the ice frozen, and I don't know.
Yeah.
Limes,
lemons. I don't know. We like to make cocktails, and we like to garnish them with limes or lemons or lemon peels or lime peels or orange peels.
But you know what we don't? Yeah. You know what I don't like to garnish with?
What, dude?
Grapefruit.
Dude, why does anybody garnish the grapefruit? I don't like that.
Exactly.
Why?
So
that exists.
If you disagree with us and you've got this amazing grapefruit cocktail with grapefruit garnish, send it our way. Send it to us in the
Let us know.
Send it to us in the Discord or on any of the social media, and we'll get back to you.
Or in a LinkedIn message, whatever it is. Let us know.
Absolutely.
But yeah, I mean, with that said, seriously, love drinking with you guys. A lot of stuff has happened in the last couple of weeks, so I appreciate you bearing with us through all that. My hope is that you continue to play chestnut checkers as this news continues to come your way. Hope you fill and kill. Definitely do that.
Absolutely got to fill and kill as the news comes your way.
Yeah.
And then no matter what this week, you guys got to stay drunkenomical.
Exactly. Cheers, my friend.
Cheers.